Hi there, welcome to Kneppy Invest. I would never have thought I would do a standalone video on Estee Lauder, but here we are. This particular video is inspired by the Intrinsic Value podcast episode titled Estee Lauder, Michael Burry's Big Bet with Daniel Mankey and Sean O'Malley. I actually have not, by the way, released on the 13th of July 2025. I have not listened to this particular podcast because honestly, I thought I don't really have that much interest in Estee Lauder. I do know they make makeup and stuff like that, so I don't have much interest in that. But I'm always willing to have a look at a company, particularly if Michael Burry's name has been dropped or name dropped. Now, the funny thing about Michael Burry and Estee Lauder is I actually Googled this because within the commentary of this particular podcast, they actually don't mention Michael Burry. So I didn't really understand why he was name dropped in the title of this episode. But then I just Googled it, and some really interesting articles here. For instance, Big Short from Reuters, Big Short investor. And that's how most people know about Michael Burry, because he was one of the main characters in Big Short. Not characters, he's a real person, but he was in Big Short or featured in Big Short. Anyway, Big Short investor Michael Burry, double stake in Estee Lauder. Okay. And then Reddit, Michael Burry has sold every stock in his portfolio except for a brand new position, Estee Lauder. Few videos on him selling all his stocks. This was in May. This legendary investor just made a huge bet, becoming bearish. And this was in May, by the way. So 2 months. Hasn't been a good bet so far. Anyway, so he doubles his investment in Estee Lauder. So this actually did intrigue me. This did intrigue me. What is he seeing in Estee Lauder? There must be some value. That's what I'm thinking. There must be some value in Estee Lauder. So what I'm going to do in this video is I'm going to go through, have a look at Estee Lauder. I've already had a look at their last quarterly transcript, and I actually did put in ChatGPT. I've also had a look at the chart, and the chart does look interesting. It does look interesting for a few reasons. So let's start this particular video looking at the company's overview. And this is exactly what I do when I'm researching any company for really the first time. I have already had a close, or not a close look, I have already had a glancery look at some of these financial metrics, and it didn't fill me with any warm, fuzzy feelings. In fact, quite the opposite. And almost I wasn't going to record this video because what I saw here was nothing to write home about. But the first thing I always look at is growth. Revenue growth negative 6.5% over the last 3 years. In fact, over the last 10 years, only 3%. Earnings per share growth negative 35.8% over the last 3 years. Over the last 10 years, negative 2.4%. So straight away, this is massive red flags. So based off revenue and earnings, this company is actually going backwards over the last 3, 5, and 10 years. So that's interesting in itself. Dividend yield 2.4%. Payout ratio apparently is negative 83.4%. Okay. Gross margin 73.9%. That's actually quite nice, but operating margins at 8.9%. Probably a little bit lower than what I would expect or want. I would at least want above 10%, preferably above 20%. So that's a little bit lower. But maybe for this type of company, I could take 8.9%, but I still want it to be above 10%. Return equity, 5-year average, 21.2%, and return invested capital, 13.1%. So that's definitely within the realms of calling Estee Lauder a high-quality company. But I wouldn't be saying that based off the lack of growth. P/E ratio, negative 35.8. So a company has not been profitable. Forward-looking P/E ratio, 43.8. Okay. Net debt, 6.75 billion, with a market cap of 31.37 billion. The debt to equity is actually 2.2. So that's probably a little bit higher than what I would like, but maybe that's to do with leases, that sort of thing. Okay, so next thing I always look at is just the financial history. So revenue has stalled. In fact, revenue was growing nicely between 2015 and 2022. In fact, you can actually change it in fiscal AI, and revenue was growing at 7.4% per year between 2015 and 2022. So, okay, it's not that bad. And even with income, we'll go to income. During that period, was it 7-8 year period? Income was actually growing at 11.87%. So now let's expand it to include current times. And in fact, the profit of this company has dropped just along with the revenue, by the way. So revenue has dropped the last few years, but profit has also dropped from above $2 billion to below 390 million. So I'm going to use, in determining, when I look at the valuation of this company, I'm going to assume this is sort of the bottom or close to the bottom of the cycle. So if you're bullish on this company going back to growth and they can increase their income or their profits back up to what you might expect for that type of company, there is a chance that this company is looking quite cheap. So we're talking about, say, a profit of maybe $2 billion. That means with a market cap of 31.37 billion, that's a P ratio of 15 or just above 15, which may not be that high if the company can move back into a growth phase. By the way, the only thing I know about Estee Lauder is they sell makeup. So that's mostly true. Mostly true. Makeup, fragrance, hair care products. I was trying to find something that I didn't know they sell, maybe handbags. I have no idea if they sold handbags, but it doesn't mention handbags here. They own quite a few different brands, including Aramis, Clinic, Lab Series, Origins. I'm going to be honest with you, I don't know most of these because I'm not their clientele. But anyway. Okay, so what we could also have a look at is what the bulls and bears say. Now, this is from Morningstar, and I don't have the highest opinion of Morningstar, but it's always interesting to have a look at what the bulls and bears say. For instance, in the bulls say section, as a premium beauty pure play, Estee Lauder is best equipped to capture growth opportunities as middle-class consumers globally upgrade from mass brands. Well, it hasn't worked the last few years. With a new factory built in Japan and an innovation center in China, Estee Lauder should be able to better serve consumer needs in the important Asia market. That could be true, but it's still speculation in a way. It could be true, but you're still speculating. You really want to see proof of that happening. Bears say sales concentration in China amid macro challenges has pressured Estee Lauder's performance, and it takes time to diversify into other large growth markets. Estee lags key rival L'Oreal in research and development for dermaPay skin care products. And even after efforts to reduce counters and diversify into other productive channels, Estee Lauder remains exposed to US department stores in structural decline, which is interesting because I wouldn't even thought about that. I didn't even know that sort of thing. I'm assuming that's true. If it's not true, then Morningstar analysis have something to say, have something to answer to. Okay, so let's go back to the financials. So we had a look at, apart from the last 2 years, Estee Lauder actually looked okay. And we're going to have a look at the chart in a second and to see how much the share price has dropped since 2021. So that's when the company had a profit of $2.4 billion and revenue of $17.7 billion. Now, the next thing I want to look at is gross margins and operating margins. Oh, it's just gone bye-bye. Oh, no, there it goes. I'm just going to have a look at gross margins and operating margins just to see how this has gone the last few years. In fact, what we'll do is we'll have a look at gross profit margins first. And this has been dropping. So I don't really like to see this. In fact, gross margins have dropped from 80.5% to 71.7%. So gross margins have dropped 10%. So that could be implying greater competition, that sort of thing. And you don't want to see that. You don't want to see gross margins dropping. At least, or at the worst, you want to see gross margins maybe going sideways or dropping just a smidgen, not by 10%. What about operating margins? I think this is going to be the same thing. And no, actually, it was rising or raising between 2015 and 2022. In fact, that's another reason why I think the share price has dropped significantly the last few years. So the company was increasing the revenue. In fact, if I remember correctly now, the profit was increasing at a greater rate than the revenue. And that actually makes sense now with the operating margins increasing. So the only way you're going to have income rising at a greater rate than revenue is if margins have expanded. And we have seen that with the operating margins for Estee Lauder between 2015 and 2022. In fact, they went from 15% to 20%. But since then, they've halved from 20% to 10%. So I think the assumption here is something bad has happened in this company the last few years, and we're going to see a bit of a turnaround. That maybe is what Michael Burry is thinking. There's going to be a turnaround in margins, particularly operating margins, and the company can continue to grow, increase in revenue and that sort of thing. Okay, I won't have a look at the. Actually, I will have a look at the P ratio, but it's negative now. So you're going to see a massive. Yeah, you're going to see a massive. Like what do you call it? Oh no, don't see it yet. I thought you were going to see it because P ratio now is negative. So I thought you'd see a massive spike downwards. Anyway, so during the last 10 years, the low in the P ratio has been around about, it's about 25. There you go, 25. So if this company can go back to growth, if they can increase their profit back up to what we saw prior to this down period, that would mean this company would have a P ratio of say 16 or so. That's me just being making some broad assumptions. But that could be the assumptions some of the experts, the analysis are using to say, hey, maybe Estee Lauder is cheap at these levels. So maybe, yeah. What about, I'm just having a look at some of these other these valuation metrics, like EV to free cash flow doesn't look that low. EV to EBIT, yeah, it doesn't look that low, historically speaking. Free cash flow yield doesn't look that low. And even price to free cash flow doesn't look that low. So for some reason, I keep wanting to say that but P ratio, and I suppose I am fiddling with my P ratio calculations based off what the company can get back to if, big if they start to grow again. Anyway, won't have a look at return on equity, return on invested capital, but I did look at the most recent quarterly update, and I just asked ChatGPT to summarize it because it's fairly long, and I am very lazy. So hopefully ChatGPT has done a good job. And yeah, even in the last quarter, everything has just been dropping. According to this, actually, what I should do just before this is a lot of times I will have a look at some of the quarterly. What's it doing quarterly? So let's go back to income, profit, and we'll also put in gross margins and operating margins, and we'll go to quarterly. Have we started seeing a bit of a turnaround? And I think the answer to that is not just yet. Not just yet, although you could say gross margins have started to increase just based off these quarterly numbers. But there's no sign of a stop in the downward trend for revenue. Oh, maybe there is. It does seem like there's a bit of seasonality. So it looks like the last quarter makes sense. The last quarter tends to be the best quarter of the calendar year. So people buying presents, that sort of thing. And the worst quarter is the one before it. And if you compare previous corresponding period, the last 3 December quarters, we've seen revenue go down. So there is still that downward trend in revenue. Gross margins look like they are increasing. Operating margins, yeah, they're all over the place. Okay, so let's go back and have a look at what ChatGPT summarizes for their last quarter results. Talking about gross margin expansion, diluted earnings per share down 33%, net sales down 9%, organic net sales, operating expenditure rose 580 basis points. Talking about strategic transformation. So you see a lot when companies are struggling. A lot of times they will go through these strategic transformations. Whether they're going to be successful remains, who knows? They could be successful, they might not. And a lot of times you'll see, I don't know if there's a new CEO with Estee Lauder, but a lot of times when you do get a new CEO, that usually means there's going to be one bad year and then they can grow from that bad year. Anyway, so accelerate consumer coverage, expand across Amazon, Premium Beauty, TikTok, Shopee, JD, etc. Strong digital momentum. Just because you want these things doesn't mean they're going to happen. Transformative innovation across pricing tiers. New product launches, Clinique, Estee Lauder, La Mer, Tom Ford, MAC, The Ordinary. Boost consumer-facing investment. Fuel growth through efficiencies. And reimagine operating model. Simplified structure. Brands own global strategy innovation. Regions own execution. Starting financial year 26, regions will own profit and loss to boost accountability and speed. Okay, so this is another reason why maybe some analysis, some fund managers a little bit more interested in Estee Lauder because they believe that this strategic transformation could be beneficial for this company. They also go through the geographic performance. I won't do that now. Talking about tariff impact, they do mention here that new US-China tariffs could materially impact financial year 26 if unresolved. And one thing I do like is any sort of outlook. So they have a financial year 25 outlook and financial year 26 beyond. Financial year 25 full-year outlook does not look good. We're talking about declining sales of 8 to 9%, earnings per share between 130, 155, gross margin 73.5, which might be a little bit higher than last year. And financial year 26 and beyond, committed to returning to organic sales growth in financial year 26, targeting solid double-digit adjusted operating margin over the next few years, ongoing transformation to improve agility, consumer reach, and profitability. And then ChatGPT asked me if I wanted to turn that into a PowerPoint summary. I said yes, and then it couldn't. It couldn't. Anyway, so chart. The chart. This is that daily chart for Estee Lauder. And the daily chart does look interesting. Share price has gone a bit of a run over the last few weeks. So nice. Share price at about $85 or something like that. Then I look at the weekly chart. And I went, wow, share price has dropped a lot. Remember, this company was nicely growing up until 2021. In the last few years, we've seen a bit of a decrease in revenue, earnings, that sort of thing. And we have seen share price drop from $370 down to below $100. So the market has really punished Estee Lauder over the past few years because of this disappointing financial performance. But if the company can turn things around, there's a possibility this company is cheap at these levels. I'll just say that, possibly cheap at these levels. I think you need a bit of faith, a bit of trust in the management that they can turn things around. I'm not totally convinced, but hey, might be cheap. So anyway, maybe that's one of the reasons why Michael Burry has bought some shares. He does think it's cheap, and he thinks the management can turn things around. Okay, that's all I have for this particular video. This look at Estee Lauder. Never thought I'd look at Estee Lauder, but here we go. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.